G'day folks, Jim here from FX Charts, Wednesday the 30th of April. Thanks for tuning in. Well, it ended up being another fairly range-bound session really today. The euro had a bit of strength in it early on, but the weaker than expected German CPI data put a lid on that, and the euro headed back into the middle of its range ahead of today's important EU CPI. There's a fair bit of data out today. We've got, aside from the European inflation, we've got there's some German unemployment numbers coming out. We've got the ADP jobs numbers, which released obviously ahead of Friday's non-farm payrolls, and we've also got the FOMC meeting today. No great change expected there, although another $10 billion in tapering looks likely. Ahead of that, we've got the BOJ meeting today, so it could be a fairly active session. So we'll go and have a look at the charts anyway. Let's just get to the euro. The euro, as you can see, once again it tested the top side of the converging resistance and support levels that we've been watching. Topped out again at 138 3/4, and that now becomes a pretty significant resistance, I think. I'm not sure we're going up there today. The 4-hour indicators all suggest the downside, if anything, could be the way to play it. Maybe we're building a bit of a bearish flag. I'm not really sure. It'll all depend on what the outcome of the EU inflation numbers are. But at the moment we're holding above 138. There's going to be some support down here at this. If we go through at 138, there'll be some bids down here around this 137.80 FIBO support. But if we go under there and under the rising trend support, then we're heading back towards this 137.20. There's some Ichimoku support down there as well. Be surprised to see it get much below there today. But if we do get under 137, then we're possibly heading back down towards this low here, which is 136 3/4. I don't think that's on the cards yet, and more likely 137 I think would hold it on the downside. If the numbers are stronger than expected, we'll obviously see a quick move back up to this 137 3/4 level. And if that were to get taken out, which I don't think it is, but if it were to, we're going back up to this 139.05 top here, and above there to 139.66. So for the time being, though, as I say, the 4-hourlies look as though it's the downside that's going to come under pressure. But the dailies are pretty neutral, so I wouldn't get too excited either way. And I think in the longer term, we'd probably got some more reasonable sideways trade. We've got the this 100-day moving average will also support it on the downside. That's just under 137.30. So if we do head low, I'd probably be buying back some shorts down there. And as I've said before, I'm still watching this long-term wedge. And prefer over the course of the next 2 weeks or so, if we do see a rally up towards 139.5, 140, sell it up there for an eventual test of the bottom side. But that's a long way off yet. Moving forward to dollar yen, we've had the manufacturing PMI got released out of Tokyo early on this morning. It hasn't actually had any effect, but it was a much worse number than expected. Came in below 50, but it's done little as far as moving dollar yen around. Now dollar yen did make another new high, 102.77, took out this 73 high, 102.73. Didn't hang on, but now we're really waiting for the BOJ decision. No change expected there, although there could be some movement after the policy statement, particularly if that gives a hint of further easing down the track. In the meantime, we've got some support down here about 102.35.40, where the 100 and 200-hour moving average are. And below there, we'll move back towards sort of 102 perhaps, and beyond there, 101.85. Don't really see it today. These are the 1-hour charts. They're showing a slight bearish inclination. But the 4-hour charts are heading possibly the other way. So I suspect we're probably in for more range trading. And I would really continue to use 102 to 102.80 as a guide, probably for the rest of the session, and possibly towards the end of the week until we get the non-farm payroll. So we'll wait and see on that one. Sterling made a break for the top side in early Europe after Mark Carney suggested that he's becoming more positive about the outlook for the UK economy. The UK GDP came in though slightly weaker than expected at 0.8 as opposed to 0.9 that was expected. So he tested the downside, and since then cable's kind of struggled a little bit higher, but it hasn't overcome this 168.57. Now that's the first important level on the top side, and then as we've said before, this 168 3/4 level takes us back on the as far as the weeklies go, right the way back to here. So this is 2009, and much will depend today, I think, on the EU CPI. If the euro gets dragged lower, then sterling will go down with it in sympathy. But as I said yesterday, I think selling the euro and buying sterling on the cross is probably not a bad way to go. If cable does get under 168, though, it's currently at 168.20. If it gets under 168, we're probably going to go back down here to this 167 3/4 area, and below there we're possibly heading back down towards the 167, where this rising trend support I think should hold it on the day. If we were to take out 168 3/4, well, then we're really off to the races. I think there's not much ahead of 170, and as I've pointed out before, this high up here at 170.5, 170.40 will become the next major target. But the weeklies are fairly flat. They're not suggesting much either way. And the dailies also look to me as though they could actually just be rolling over. I think we might be in for a bit of a test of the downside, and suspect that maybe we might get a look back towards the 167 over the next 24 hours or so. Dollar Swiss, that once again it held the minor rising trend support here. It's a little bit harder on the back of the weaker euro. As I said yesterday, I kind of like buying dips, and I think as long as the 88 the figure holds today, possibly 87, 85 we might see again. That was the session low, but I kind of like it for a move back up to this sort of 88 3/4 level. That's going to be quite strong resistance though, but if we can get above there, then we might sort of head on towards 89 the figure. It all depends on the direction of the euro, and until then I'm a bit ambivalent either way. But as I say, if below 88 I still like to buy dips. Having said that, if we would go under sort of 87.70, particularly 87.42, which was this low here, I would not want to be long, so I'd have stops pretty tight. The Aussie, well, that's still trading pretty nicely. It touched the bottom of the trend channel that we were talking about yesterday, 92.27. It's come back up to sort of about 92.80, and it's right in the middle at the moment. The 4-hour charts still look a little bit positive to me, and we've got this bullish divergence still. So the dailies, though, are not suggesting we should get carried away on the top side at the moment. So I suspect that today, in the absence of any major domestic data, we've got private sector credit coming out later on, but the Aussie is going to be pushed around by the offshore numbers, and really it's looking forward to the FOMC, and probably more importantly the Chinese manufacturing PMI tomorrow. So today I don't expect too much. Call it 92.30 to 92.80 possibly to cover it. It might get some, if the EU CPI is a weak number today, we might see a bit of a push higher in the Aussie on the back of demand as traders sell the Euro Aussie cross. But that's about it. I'm not really looking for anything too much in the meantime. The Kiwi, likewise, we've just had some decent building data. The building consents were up 8.3% month on month in March. Expected up 0.2. So as you can see on the short-term charts, that saw a bit of a squeeze higher in the Kiwi, up to about 80. Where's it been up to? 85.61. But it is sitting around here at the moment. Now, further out, the Kiwi did test the neckline here, got down to 85.16 overnight. It ran out of sellers, and as the Aussie moved up off the channel base, that took the Kiwi out with it, squeezed a few shorts, and now I think the 4-hour charts are actually showing a little, or some potential for a bit of a move higher. I think on the day 85, sort of 75.80 will cover it. We've got this yesterday's top up here, which is 85.87, and above there, sort of 86.30. I don't think we're going above 86 today. as we wait for the data later in the session. On the downside, 85.30 now becomes support ahead of 85.15, which was the session low, and then there's sort of 85 the figure area. Below there, then I'm not sure I'd want to be caught too long. There's going to be some support here at 84.85 or so, 84.80. And if we go under that 38.2% FIBO level, then we could see a more serious drop down to sort of 84.30, potentially back to 84 the figure. So that's about it tonight. It could be fairly busy later on. Let's hope so, because it's been pretty quiet recently. Wait for the data. The BOJ is going to be the first cab off the rank. We have got, as I say, some minor Australian data out as well, the public sector credit. But it'll be Europe before things really get going. And once that winds up, it could get quite interesting. So keep your stops tight. Have a good day's trading, and we'll talk to you tomorrow. Cheers.